Assalamualaikum. We continue with the lecture with selected MPSAS, continuation from the previous lecture on accrual accounting in public sector as well as in Malaysian public government. Right, so we'll cover MPSAS 9, 23, 17, 24, and 32. Quickly, as we discussed. For MPSAS number 1, it's already covered in previous lecture. So today we're going to discuss on MPSAS 17, on PPE, MPSAS 23, on revenue from non-exchange transactions, as well as revenue from exchange transactions. It's also briefly covered. And then MPSAS 24 on the budget presentation of budget information, as well as MPSAS 32 service concession arrangement. Okay, so but in all is briefly discussed, but a bit more on MPSAS 17 because some unique assets that is available in public sector organizations. Okay, for MPSAS 9, revenue from exchange transactions. Okay, this is very similar to in private sector, where the income based on the services. So income is recognized based on trade and exchange transactions. Example, income from services, trading goods, interest income, petroleum, royalty, dividends, rental, and similar distributions of income resulted from use of assets by other external entities. Okay, that is under MPSAS 9. Right now, the revenue from non-exchange transactions. Okay, so it's very different from arm's length transactions. So there is no, the buyers pay the price of the services. Okay, in this case, it's revenue from non-exchange transactions. What does it mean? So one major example are taxes, and the other are transfers. Okay, so taxes, I think that is being paid by all taxpayers. Okay, those who are eligible to pay the tax. Secondly, transfers, share similar trade where the resource transfer from one entity to another without exchange in similar value, and they are not taxes. Okay, transfers include grants, debt forgiveness, fine, or donations, either in kind, cash, good, or services. So when with the receipt of tax and transfers, so the public sector organizations can recognize assets and revenue. In some instances, they can also recognize liability. In non-exchange transaction, an entity either receive value from another entity without directly giving approximately equal value in exchange, or give value to another entity without directly receiving approximately equal value in exchange. So usually for exchange transactions, you exchange services or goods. Okay, whereas in this case, the absence of the exchange items or services. Okay, so with regards to the non-exchange transactions, in terms of recognitions, okay, the recognition of as an asset if the government entity have control over the resources, as well as can meet the criteria. Okay, the first is it is probable that the future economic benefits as well as service potential, okay, associated with the asset will flow to the entity. Okay, that's future economic benefits and as well as service potential, because I will discuss that. Okay, what does it mean? Future economic benefits including cash flow, okay, but service potential, because sometimes public sector services, they provide services that can achieve their objective, okay, without the cash inflow. And the fair value of the asset can be measured reliably. Okay, so I think that's the requirements for recognition as well as measurement. An inflow of resources from a non-exchange transaction recognized as an asset shall also be recognized as revenue. Okay, so asset is recognized, so the corresponding entry will be revenue, except to the extent that a liability is also recognized. Okay, so instead of recognizing revenue, so the entity will recognize liability. As an entity satisfy a present obligation, okay, with regards to entity, a reduction in the liability, and the same amount will be recognized as revenue. Right, in terms of measurement, okay, revenue from non-exchange transactions shall be measured at the amount of the increase in net asset. So, okay, so that's the amount of revenue to be recognized. And when, as a result of non-exchange transactions, an entity recognize an asset, it also recognizes revenue. Okay, at what amount? So the benchmark will be at fair value of the assets. Right, now we move on to PPE. Okay, basically the property and equipments. Okay, the scopes, so we'll discuss on recognition and measurement. Okay, specific issues on heritage assets as well as infrastructure assets. Okay, the standard applies to property, plant and equipment, including specialist military equipment. Okay, because military equipment is only for government entities. Infrastructure assets, okay, government also, so many infrastructure assets throughout the country. Okay, including roads, bridges, and service concession arrangement assets. Okay, after initial recognition, okay, we'll discuss that as well. All right. So what is the measurement and recognition? The cost of an item or PPE shall be recognized as an asset only. It is probable that future economic benefits, okay, future cash flow or service potential associated with the item will flow to the entity, and the cost of fair value of item can be measured. Okay, so but here I think two, not only fair value but the cost as well. For non-exchange items, definitely they use fair value, but for others, definitely they can estimate the cost. Then cost should be used for the initial recognition. Right, here I also give the definitions on the service potential. Okay, service potential, what does that mean? Service potential indicates the capacity of an asset to provide goods and services in accordance with the entity objective without necessarily generating any net cash inflow. Okay, so unlike the future economic benefits with cash flow, whereas service potential, because these are public sector organizations, okay, not necessarily they will charge their price or service fees to the recipients of their services, okay, unlike private sector organizations where they charge price to the customers. Okay, this is due to many of the assets and liabilities of entity within the public sectors are acquired or incurred as a result of the entity's service delivery mandate. Okay, for example, heritage assets and parks maintained for public access, right? Okay, with regards to measurement and recognition, okay, so they can measure at cost, but for an asset acquired through non-exchange transaction, its cost shall be measured at fair value at the date of acquisition. Okay, this measurement at recognition. Okay, an item or property PPE may be acquired through a non-exchange transaction. For example, land may be contributed to local government by a developer at no or nominal consideration. Or no means even at no cost, or nominal, very, it's like $1 or RM1 to enable the local government to develop park, roads and paths in the developments. Okay, usually in a piece of land that is for development. So part of the lands based on the planning of the plan of the land, that will be given to the local government to manage. Okay, the roads. Okay, because they have to put like street lighting and others, all the necessities in the development of the, let's say, housing areas, and then they will be managed by the local government. So those lands are transferred to the local government is basically non-exchange transaction item. Right, so it can be then it's very difficult to put price. Okay, then nominal value can be assigned to it. An asset may also be acquired through non-exchange transactions by exercise of power or sequestration. Okay, seizure for the state or seizure by the states. Okay, so sometimes if you look at when the government they want to build roads, public or federal roads, then they have to take away land from owners. Of course, sometimes when they go through market price. Okay, but there is also possibility that is taken. Okay, with non-exchange transactions. Under these circumstances, the cost of item is at fair value as the date it is acquired. Okay, I think for the this kind of lands or assets. If the fair value can be measured reliably, then definitely the fair value should be used. Right, here on this slide, discuss on measurement after recognition. Okay, I think very similar to in IFRS, okay, or MFRS. So there are two models, cost model as well as revaluation model. So definitely the government entities, they can choose which accounting policy that is relevant. Okay, they can use cost model or revaluation model. But you have to understand for revaluation model, they use it is closely they need to measure more frequently so that the fair value they can there is not much difference between the recorded value against or the book value against the fair value. Okay, measurement after revaluation. Revaluation shall be made with sufficiently regularity to ensure that the carrying amount does not differ materially from that which would be determined using fair value at the reporting date. Okay, so the fair value using market-based evidence. So basically, you use the services by the appraiser or by the valuer, professional valuer, okay, with the professional qualification. So is there, I think, in the market value of the properties? Okay, so then definitely there's an issue of cost. Definitely, okay, if you use the valuer, so it's a bit costly. So that can be a challenge for government organizations. Okay, are they willing to incur extra charges because of valuation of properties by the professional valuer is they have to pay the services, the professional services. Right, and definitely for many assets, the fair value will be readily ascertainable by reference of to quoted prices. Okay, for instance, like land, non-specialized buildings, motor vehicles. But there are also public sector assets. It's difficult to establish the market value simply because of the absence of the market. Okay, so this including the heritage assets, infrastructure assets. For some public sector assets, it may be difficult to establish the market value because of the absence of market transactions for these assets. Okay, if no evidence is available to determine the market value in active and liquid market, then they can use a kind of comparison, similar buildings or similar properties with similar characteristics. So what will be the fair value? That also can be done, a kind of use a comparison. Another option, okay, for example, the fair value of vacant government land that has been held for a long period, during which time there have been few transactions, may be estimated by reference to the market value of the land with similar features and topography in similar location for which market evidence is available. In many cases, the appreciated replacement cost of an asset can be established by reference to the buying price of similar asset with similar remaining service potential in active and liquid market. In some cases, an asset reproduction cost, okay, these are another measurement method, reproduction cost, will be the best indicator of its replacement cost. For example, in the event of loss, a parliament building may be reproduced rather than replaced with alternative accommodation because of its significance to the community. Okay, very interesting example given, parliament building, because in the country, normally parliament building is only one. It's not easy to be replaced. Okay, classes of PPE that can be reported as well as for accounting. Okay, land, okay, some of these are related to infrastructure assets, roads, okay, ships, aircraft, okay, specialist military equipments, right, oil rigs, okay, others are quite similar to private sector organizations. Okay, so these are examples, like bridges, for instance. Of course, in the case of petroleum will be under Petronas, okay, but Petronas is a company, but still wholly owned by the government. Okay, heritage assets, there's another category of assets under PPE. Some assets are described as their heritage assets because of their cultural, environmental, or historical significance. Okay, example of heritage assets include historical buildings and monuments, archaeological site, conservation areas and nature reserve, and works of arts. Okay, but in case of Malaysia, I just show one example here, is the building of Sultan Abdul Samad. okay, how to value this building, okay, for the government to put in their book. Okay, certain characteristics of heritage assets, including their value in cultural, environmental, educational, historical, okay, is unlikely to be fully reflected with the market price, okay, and statutory obligations, okay, often irreplaceable, and their value may increase over time, even if their physical conditions deteriorates, okay, because of the cultural or environmental significance. It may be difficult to estimate the useful life, which in some cases could be several hundreds years, okay. I think you can imagine the pyramid, or in Malaysia, some very historical sites, very interesting. Right, public sector entities may have large holdings of heritage assets that have been acquired over many years and by various means, including purchase, donation, bequest, and sequestration. These assets are rarely held by the ability to generate cash inflow, and there may be legal or social obstacles to use them for such purpose. Right, some heritage assets have future economic benefits or service potential other than their heritage value. For example, historical building being used for office accommodation. I think this is applicable in Malaysia, like the railway, Malaysian Railway. Okay, some of their buildings in KL, Kereta Api Tanah Melayu. Okay, so they are old buildings. Okay, they use as a office. In these cases, they may be recognized and measured on the same basis as other PPEs. For other heritage assets, their future economic benefits or service potential is limited to their heritage characteristics. Okay, example of monuments, okay, like Tugu Negara. The existence of both future economic benefits and service potential can affect the choice of measurement base. Heritage assets should be recorded if it is gazetted under National Heritage. This is an example. If cost is available, it shall be measured at cost. If it is impractical to determine the cost, then it should be measured at nominal cost of RM1. Okay, entities that recognize heritage assets are required to disclose in respect of those assets. These are the disclosure items, including the measurement basis, depreciation method, okay, how much is gross carrying amount, and others. Right, now we move on to infrastructure assets. Some assets are commonly described as infrastructure assets, but there is no universally accepted definition. Okay, if you look at some of the following characteristics, they are part of a system or network, okay, like road network, okay, like water supply pipes, okay, that have across the country. They are specialized in nature and do not have alternative use. Okay, if you look at okay, the water pipes, okay, the only thing is for water, and possibly definitely the roads. They are immovable and they may be subject to constraints on disposal. Okay, it's very difficult to dispose. Although ownership of infrastructure assets is not confined to entities in the public sector, significant infrastructure assets are frequently found in the public sector. So look at the example here, include road network, sewer system, okay, water and power supply, and communication networks. Okay, but communication networks can be in the private sector as well as public. Okay, another asset is the asset on third-party land. Okay, so in the case for Malaysian government, government buildings sitting on third-party land shall not be accounted for as property of the federal government of Malaysia if the government is not the owner. However, government building sitting on state or third-party land can be accounted as PPE if ownership or control over the building can be demonstrated under the following circumstances, okay, to basically account. Okay, definitely one of them is right to control and use. The other is a control given by legislative. Then they can account that as part of their PPE. Okay, these are the items to be disclosed under PPE. Okay, you can read through. Right, so including the reconciliation items. Next, we move to MPSAS 24, presentation of budget information in financial statements. So generally in FRS or in the private sector companies, they don't have to show their budget information, whereas governments, okay, they can present their budget information as part of their financial statements. So these are the portfolio format that is shared in MPSAS 24. Okay, so basically the budgeted amount, as well as the actual amount of expenditures. Okay, so in this example, receipt as well as expenditures. Okay, but you can look at MPSAS 24 for the details. Now we move on to MPSAS 32, Service Concession Arrangement, Government as Grantor. Okay, so service concession is as a result of the buildings or the facilities as a result of PPP or PFI or privatization initiative. I think generally from the procurement process. Okay, I think we discussed about PPP as well as PFI, so you understand the nature of the assets that we discussed here. So, and the asset can be accounted in government book. A service concession arrangement is a binding arrangement between the grantor, which is in the case of government entities, as an operator in the private sector. The operator uses the service concession asset to provide a public service on behalf of the guarantor, the government, for a specified period of time. Okay, as in the case of PFI. The operator is compensated for its service over the period of the service concession arrangement. Then, of course, there is the issue of asset. So what is a service concession asset? It's an asset used to provide public services in a service concession arrangement or contract. It's provided by the operator. The operator construct, develop, acquire from a third party. It's an existing asset of the operator or provided by the guarantor. It's an existing of an asset of the guarantor as well as it's an upgrade to an existing asset of the grantor. Then it is operated by the service concession companies. Right, so with that, recognition and measurement of service concession asset. The grantor, government entities in this case, shall recognize an asset provided by the operator and an upgrade to the existing asset of the grantor as a service concession asset if the grantor controls or regulate what service the operator must provide with the assets. Okay, that's the first one. Secondly, the grantor controls to the ownership, beneficial entitlement, or otherwise, as any significant residual interest in the asset at the end of the term of the arrangement. Okay, so then the grantor can recognize a service concession asset as part of their PPE. Secondly, of course, with the recognition of asset, the corresponding item will be the measuring the recognition of liabilities. When the guarantor recognizes service concession asset in accordance with paragraph 9, the guarantor shall also recognize a liability. Okay, the liability recognized in accordance with this detail, measured at the same amount as the service concession asset. Okay, adjusted by the amount of any consideration given from the guarantor to the operator or from the operator to the guarantor. So it depends on the direction. So that will determine the amount of in terms of the measurement of the liability. Okay, but in any case, when the guarantor recognizes the concession asset, okay, and there is a commitment for them to pay for in the future periods to the operator, then they have to recognize liabilities as well. Right, I think that's the end of it. Okay, if you have a question, please do ask me. Okay, the more you ask, better understanding you can get. So with that, I end this lecture. Assalamualaikum.